Good morning, good morning, good morning. Get my goodies rolling over here. All right. Right. All right. Good morning, everybody. Good morning. Good morning. Let me know as you guys and gals pop in here real quick, if you would. I need to get this saved over here. And now that I can get this rolling. All right. I am live. So good morning, everybody. If you would, as you hop on, just say hello. Let me know you're here. And we can get rolling. Get started for this wonderful Monday, January 12th, 6:30 a.m. my time here in the city, here in Kansas City. Going to be a little bit of a lighter Monday. We don't have any red folder events, okay, at the moment. I'm going to try something while I'm waiting on you guys to pop in. I'm going to stop sharing. I'm going to try something real quick over here. Let me see here. I should be able to see if I can pop between. There we go. That's what I was trying to do. So I shared my screen now to where whenever I flip between windows, I don't have to manually switch the share over. So there we go. I am today years old figuring that part out. So now I won't be talking on a chart while I'm still over here on one of my other windows. So that's a win already. Let me just get this shared over here. Let's see here. I am live. I'm live now. Trader. So yeah, guys and gals, pop in. When you pop in, let me know. Let me know if you're here, when you're here, and we will get rolling here in just about a minute. I am just taking a quick peek at some news first. See what everybody's been flapping their jaws about. I like to take a look at Yahoo Finance. I like to take a look at the X account and just see what the broad news world is talking about in the world of finance. Okay, it's always good just to see the 30,000 foot view, just to see what everybody else is looking at. All these reports that you see here, articles on really about any news website. Oftentimes it's not 100%. Not 100% the right way to be looking at a asset that you're looking to trade. I mean, this is always public opinion. This is always a reporter's opinion. Anytime you see all these stories, and as you guys hopefully know by now, it's just not always the most accurate way to trade. Okay, but it's a good idea to see where everybody else is. Okay, people that only know and pay attention to stuff like this. As far as X goes, I like to follow specific people in the currency world and in the finance world. Just to see just to see the 30,000-foot view of the news of the day, the topic du jour. So yeah, there's specific people I follow in here. Some of the higher up people in the country, prime ministers of other countries, premiers, presidents, all those types of people, vice presidents, just to get an idea of, whatever the topic du jour is, really as simple as that. So it's always good to start there, and love him or hate him, guys. It's a good idea to have, follow Trump over on the Truth Social, which is his platform, of course, because anytime he is getting ready to do something, you can often find clues on here just seeing what he's talking about for various different things. So just wanted to point that out to you guys. Let's see here. Get over here. And then Financial Juice, that's another good this is another really good site. If you guys haven't checked into this yet, financialjuice.com. Just think of it like a squawk box, if you will, kind of like a squawk box of financial news. Anytime there's some items in there affecting the assets we trade, okay, whether it's the indices over here, the FX pairs, equities, crypto. This site does a really good job of scouring the entire internet on some of the main financial sites and putting all the relevant reports, news releases in order for you. So it's a really cool asset to have. And plus it gives you a economic calendar over here on the left as well. And yeah, it's just a really good site. This is one that I used to use a lot when I'd be writing up my news articles for the news pieces that I had when I was with Ola Prime. Okay, this is where I would come and collect all the goodies, take a look at all these reports, and write up an article from it. So really, really good site. But they're on top of things. So especially when it comes to these economic calendar releases, they, as soon as these reports come out, or if somebody's speaking like Fed Barkett and Bostic speaking today, then they do a really good job of getting that stuff updated in here ASAP. And then you just click the button of whatever article it is, and it'll send you right straight over to the source. Okay, in this case, FX Street. So FX Street is a really, really good site to come to, just to make sure and see what's happening in the day. Click over here on the news tab, and then down here you get all your articles. It's a really cool website that I've been using really the whole time I've been trading. Okay, for 12 years actually. Yeah, this is my 12th year actually in January. Okay, January 4th. That was when I took my class, my very first trading class, and that was in stocks at the time. So stocks. So I took, and that was with Online Trading Academy. Okay, I think they're under a new name now. I think they're still around, but they're just under a new name. I think it's just Trading Academy. But that would have been 2014. Okay, January. So I took a core strategy class where we got taught supply and demand, risk management, hardcore, and then they have to pick an asset to use as for the curriculum. So it ended up being stock trading. So learned how to find good stocks to trade each day. Okay? Talking about betas and volumes and this and that, all kinds of different parameters. I think I might still have that saved somewhere. Let me look. Do I have that saved over here? Let's see here. Yeah, I don't know. I'll have to dig into that another time. No, FinViz. Yeah, this is it, I think. Yeah, just looking at some of the parameters to look at just to make sure you're trading decent stocks throughout the day. They actually taught us, as far as stocks goes, look for stocks that are priced $15 to $80. ADV is under $1.5 million. ATR, average true range, at least $1. Beta, see, some of these indicators just to help filter out, so you're not having to look at 18,000 stocks, figure out what to day trade throughout the course of a day. So this was a kind of some of the parameters they gave us to start with. But yeah, I didn't really get too deep into the stocks because, again, that's when I started getting into currency trading. So anyway, what have we got going on today? Well, that's it right there, ladies and gents. That is the economic calendar. And as you can see, there's no red or orange folder events. Absolutely nothing. In fact, if I turn off the yellow and leave just the high impact for the week, this week, there's our calendar. Okay, we don't have anything today for a high impact, from a high impact point of view. It's all about some of those yellow folder events today, but the red folders don't start till tomorrow at 7:30 a.m. Central. So that'll be an hour after I start my stream tomorrow, and that'll be some inflation numbers for the dollar. So that's it. Okay. And then Wednesday, we get into some more retail sales and PPI numbers here in the States at the same time, 7:30 a.m. Central Standard Time. And then Thursday, GDP for the British pound, okay, where they are projecting to be at a 0% for their report. Previous was a negative 0.1. So not a whole lot going on. I mean, that would be the ever so slightest of increases if that were the case. But, it's still at 0. The GDP or the British pound, they could definitely use some help. They are missing expectations on every single one of their major reports right now. Okay. So that's the British pound. And then our normal weekly unemployment claims later on. Okay. Again, 7:30 a.m. my time here in the States. So that'd be 8:30 a.m. Eastern Standard or New York City. Let's see here. And then just taking a look at some of these currencies over here. Let's see here. We're going to go to the fundamental analysis and take a look at some economic heat maps. Okay. Right here. So this is your at a glance 30,000 foot view of the 8 major currencies that we trade, and showing the percentages of reports that have exceeded expectations in those countries. So basically, the strongest currencies we have right now, there's a 3-way tie. Okay, with the Canada dollar here, the euro. So there's the Canada dollar at 67%. The euro, and the Japanese yen. All 3 of those are tied right now. Just very simply means they've exceeded expectations on, well, basically 2/3 or 67% of their rather high impact events. Okay. So that is denoting economic outperformance. Okay. Now, I wouldn't say that's a super high number. I mean, it is over 60. I like to see anything that's basically outside of that 40 to 60% range, because anything inside is more neutral. So in other words, it's not really given a very super strong fundamental signal to buy or sell. Okay, buy or short. But as long as it's over 60 like this, yeah, I feel a lot better about buying that asset. So obviously the goal would be to pair it with something weak. And as you can see, we just talked about the British pound. Look at that. This thing's sitting at 0%. Okay. So that is easily the weakest currency when we're talking about economic outperformance, or in this case, underperformance. So British pound trails the way. The Swiss franc's not far behind it. Okay. I think it's only exceeded expectations on like 1 report lately. So we'll take a look at these individual currencies in a moment. But yeah, the idea here is very simply to take one of these strong currencies, euro, yen, or the Canada dollar, and pair it up with a weak currency. So you could take a look at pound CAD for shorts. You could take a look at euro. Hold on a second. Yeah, pound CAD for shorts. You could take a look at euro pound for buys. You could take a look at pound yen for shorts. Okay. Again, we're just simply matching up the strongest with the weakest currencies. That's a beautiful thing about just this speed gauge alone. This is a trade. This is almost a trading plan, literally just on its own, just simply matching up the strong and the weak currencies. It's just a beautiful thing. So, and then the U.S. dollar chilling over here at a 42%. I kind of touched on this on my Sunday video last night on the U.S. dollar. Let's take a look at this thing. Okay, so again, we're sitting at about 42%. So it's just a little bit on the bearish side, but still a little bit on the neutral side, if that makes sense. So I'm not really, even though it's down there in the 40% range, I feel like it's kind of neutral, but trying to go bearish on us. Okay, now it hasn't done it yet, so I don't want to like warn anybody or threaten anything. Okay. 42 is 42. 42 is not 17 like the Swiss franc. 42 is not 0 like the British pound. But look at last week. I mean, any dates you see in yellow font, those are reports released in the last 7 calendar days. And when it came to last week's employment numbers, a little bit on the wolf side. Okay. JOLTS job openings came in a lot lower again. In fact, in fact, I could actually just go take a quick look over here. Let's see here. Economic technical. Where is the quickest job? Labor market data. Here we go. Okay, let's take a look at JOLTS. Excuse me. Okay, JOLTS. So this thing just very, very, very slowly kind of grinding to the downside. I don't know. Let me see if I can't put this in add another year or two inside of this. Okay. Just through in 2 years. Okay. So for the last 2 years, this thing's just very slowly, very gradually trailing downward. Okay. So, and yeah, you see the red dot. That was the forecast for this report we just had a few days ago. Okay. The blue bar denotes the actual value. So we clearly missed it. Okay. Missed it by a good, what was that, 500,000 almost, 450,000? Okay. It's not looking good. It's not really looking that good, I got to be honest. So that was the JOLTS job openings. Okay, let's take a look at non-farm payroll. What's non-farm payroll look like over here? Okay, let's add a couple more another year onto that just to make it a little bigger. Hey, look at this non-farm payroll. Can we not see a slow and steady decline over time? Okay, 353,000 way back here a couple years ago, and just a very. I mean, you could put up a trend line on this thing. Okay, that's something a lot of people don't really, I don't think, stop to think about when they're looking at fundamental analysis. Anything is chartable. Even the trajectories and trends of these reports. I mean, that's the downtrend. That is a clear downtrend. Hey, look at the yellow line. I mean, you had a big hiccup down here on November 1st, okay, of 2024, and then you had a rebound. But then, yeah, it's just a very, that's kind of the outlier. But look, anybody can easily see these, see these moves, these trends. So, so that was non-farm. I need to figure something out. Oh, okay. So anyway, that was non-farm payroll, and then ADP. Yeah, this is another one. Could take a look at ADP. All right. Do we not see a similar trend over here? Big spike back here in 2023. Big drop, little slight increase up, and then now we're back on our downwards trajectory. Okay, the forecast is always the red dot on here, and then the revisions would be in the yellow line, which is another thing that's important to keep in mind when you're looking at some of these reports, especially some of these jobs numbers, because every time we get a release, it also gives us a revision from the previous number. So that in itself is a clue. Okay. Just like this one, this number right here. Let's see here. I was just looking at one particular. I mean, well, just revisions period. I mean, look back here on October 30th, 2024 for this report. Okay, that was a big number, 233,000 as far as the ADP job number. But then when you go to the next month, okay, we had a decline, but not only did we have a decline, we got a revision from that previous period's report, and that was way lower. Okay, that's 184,000 was the revision from 233,000. See, that in itself is another clue. Okay, a lot of people don't really know that or pay attention to revisions, but anytime a current report comes out, it's always good to see where the revision, if it revised up or revised down from the previous report. Okay, that's another clue in the fundamental scheme of things. So that was some of the bearish, employment numbers last week. But then we also had the jobless claims number come in very slightly bullish, guys. I mean, when you're looking at a $200,000 number, this thing only declined by 2,000. So it's not like this was that big a deal, but it was still bullish. Okay, we had 2,000 less people hit the jobless market. Okay, hit the unemployment line, the bread line. Okay. So that was bullish. Unemployment rate ticked down by 0.1%. So that was bullish. And then your wage growth number. Okay. This is the number you always want to compare with inflation. Okay. With the inflation to see where your real wages number is. And if inflation is 2.7%, like you see up here for the CPI, okay, this is your inflation number, 2.7%. So what you want to do is take your wage growth number, which is 3.8, and subtract your inflation to get an idea of your real wage number for the country. So that's 0.9% increase. So even with that inflation, the money situation in the pockets of the average citizen here in the States is 0.9% better. I mean, that's just the reality of how you calculate that out. A lot of people don't want to talk about that, okay, but that's the way it works. 0.9% increase. That's your real wages number. So anyway, yeah, good wage number, good unemployment rate number, good jobless claims number. So 3 bullish, 3 bearish, kind of splits down the middle, cancels each other out. But yeah, at the end of the day, U.S. dollar sitting at 42%, a little bit on the neutral side. And that's about it for that. Let's take a look at the British pound real quick. Okay, the British pound heat map. Okay, we had one report released last week. That was their services PMI, where they did have a miss on that, which was bearish. But look at this. Not a single one of the British pound's higher impact economic reports has exceeded expectations. Not a single one. That's this aisle right here. Okay, they had one neutral reading, but that was back in mid-December on their unemployment rate, which is a little high, okay, 5.1%. But outside of that, everything else, every single one of these other reports, the economists have absolutely missed the number. So 0%, guys. That's not the greatest look if you're looking at a currency when not a single one of their high-impact events has exceeded expectations. One neutral, and then everything else missed expectations. That's economic underperformance. And that's why the British pound is really the number one sell right now as far as the fundamental analysis. The Swiss franc, okay, it's not much better. If we flip over here to the Swiss franc, this thing has exceeded expectations on one report, and that was the producer price index report back in mid-December. Okay. Other than that, similar situation to the British pound. We had one neutral report where they nailed the CPI number. But after that, guys, and including all these reports we had in the last 7 days, okay, we had their purchasing managers index numbers come out, the retail sales, the inflation reporting, and the unemployment rate. All these numbers missed. Okay, all these numbers missed expectations. So that's why the Swiss franc only currently at a 16%. Okay, so it's not so good, not looking that great. It's not as bad as the British pound, thanks to their PPI number, okay, their mid-December PPI number. But yeah, It's not that far away either. So Swiss franc is the number 2 most bearish currency at the moment. Okay. Yeah, and then I think the rest of them are pretty well neutral. Again, the euro, the yen, and the Canada dollar are the strongest currencies. The pound is easily the weakest currency, with the Swiss franc not far behind it. You add all that together, you do get a global average on the 8 majors of 46%. So that's right around neutral. Okay. So that's not bad. It's not horrible, but it's not great either. So basically the euro, the yen, the Canada dollar are kind of carrying the lot. But then you got the pound and the Swissy dragging them down. So it's a little bit of a tug of war, not too bad. But there's still plenty of opportunities. So anyway, you guys, yeah, is anybody in the chat? Let me know if I'm talking to myself or not. I think I saw 1 or 2 of you in there. If you got any assets or anything that you'd like me to take a look at, let me know. I am in a trade, which I'm just about to show. I am in an Aussie dollar long. I got in this trade on Friday, I think around midday, and I decided to keep it open. So this is now 2 weeks in a row where I've kept the trade open on Friday. And basically went against the fear of having a Sunday gap above or below my stop loss, right? So it's 2 weeks in a row. It's worked out pretty well both times. Thankfully, the challenge accounts I have allow for weekend holds, so I don't have to close them out Fridays. And I'm a swing trader anyway. Okay? Typically 1 to 4 days. But yeah, I just found a level I liked, and I wanted to keep it open. So we'll take a look at that. Actually, we might as well just take a look at it now. What do you think? Aussie dollar. Now, before I show the chart, just a reminder on the top setups over here. Okay, let's take a look at the top setups. Okay, Aussie dollar is giving me a bullish signal. Okay, got a bullish score of a 6. As always, guys and gals, anytime you see a score on here of a 5 or higher, that is a bullish signal. If you see a -5 or lower, that is a bearish signal. Okay, that's a combination of a couple technical indicators, but mainly sentiment and then fundamental analysis. Okay, so fundamental analysis over here to the right, sentiment analysis right here, and then just there's a couple technical indicators like seasonality and trend, where they just simply utilize the simple moving average crossover on the what? I always get these numbers wrong. I think it's like a 6 and a 12. I don't know. You know, a couple numbers in the single digits and teens, I believe it is, as far as the moving averages. So it's just a simple crossover. I don't personally pay as much attention to that because I'm all about looking at where the unfilled orders are on a chart, the supply and demand zone. So, but anyway, yeah, this is just nothing more than a reason to go look at a chart for that asset. This does not tell me to go out and smash the buy or the sell button. This is nothing more than a filter. Okay, it's not a signal service. Okay, it's just a filter. This is filtering out the noise, and it's doing it on the technical, fundamental, and sentiment analysis points of view. So yeah, Aussie dollar, the trade I'm in, +6, and that's why I held it on Friday into opening of the session yesterday. So yeah, we'll take a look at that. Outside of that, strongest buy is a Euro Swiss. Okay, you only got one item against it, and that is their year-over-year PPI number, where it does slightly favor the Swiss franc. But other than that, you got a bunch of neutrals where they're canceling each other out, and then you got a lot of blue boxes that is favoring the euro over the Swissy. That's a very bullish signal. These are my favorite ones to see. Anytime you see very bullish, that just simply means it's 9 or higher. Okay, and then on the flip side for the bearish, that would be -9 or lower. So basically, -5 to -8 is bearish. -9 or lower is very bearish. Same is true if it's on the bullish side. So anyway, we'll take a look at some of these assets here. Euro Swiss number 1, silver and gold at the top. Okay, it's up there as well. Got a 7 and an 8 respectively for gold and silver. A little bit of risk off. Okay, don't have any indices on there. I think we had the Dow is on there. That's right. So yeah, the Dow is the one index that I'm going to be interested in taking a look at. And I did find a demand zone on there that I'm just waiting on a pullback, guys. Okay. Euro dollar has popped on the list. It popped on late last night before I went to bed. So we'll definitely take a look at that. And then on the short side, Swiss yen and pound Aussie. That's it. Okay. I don't trade the South African rand. So I'm just left with the two. So let's take a look at my trade. Now on the Aussie dollar long, okay, over here on this trade, just going back to a 4-hour time frame, what I was looking at. So there's a couple things on here. Number one, my favorite confluence is going to be this daily 4-hour demand zone underneath. But look, scrolling out, you can see if I put a trend line from here to that zone, and then we get a little closer. Okay, we had a bounce off this zone, this line, bounce here. We had the formation of this 4-hour demand zone here. And what happened when this zone created? We had an expanded range candle coming out with a pretty decent volume spike, and it ended up pushing all the way up and breaking these structures. So a BOS. Okay, we had to break a structure. So that shows me that the origin of this strong move up has some strength. Okay, so I'm just very simply just wait for a retracement back to this zone to initiate a buy order. Now, I wanted to refine this. Okay, it's a 4-hour demand zone, but anytime I look at a zone, I like to divide it by 4 and go take a look and see if I get some confluence. So 4 divided by 4 is 1 hour, right? So we're going to drop down to a 1 hour and look at this demand zone candle over here. I mean, this is as pretty as it gets. Okay. We're taking a look at this candle here. So this is a 1 hour demand zone inside of a 4-hour demand zone. That's confluence. That's also a gap. Do we have an acceleration gap? We do right there. Okay. There is our acceleration gap, right? So if I turn my drawings off, it's just very simply the top of the demand zone or the proximal line of the demand zone, skip the leg out candle and go to the bottom of the second candle, and that's this one. So that's your inefficiency in the market. Okay. That's an inefficient market. This is what banks, hedge funds, insurance, all those people, all the bigwigs, the whales, this is what they like to attack because they know typically there's going to be buyers on the other side of that. Okay. Unfilled orders, I should say. Okay. Unfilled orders. So that's why I wrapped a rectangle around that. Well, the 4-hour, but specifically I put a white line at the top because that's essentially my entry point. Okay. So I know I've got gaps on the 1 hour, the 4-hour. I'm good to go at this point. So I just simply need a retracement down. I need to go to a smaller time frame and see some rejection. Okay. So just taking a look, and here is what we came up with. All right. So again, the white line is the proximal line of the 1 hour zone. Price dropped in. We started getting that bounce right here. Now I didn't buy yet because I wanted to see a break of structure and then a retracement. So I finally got the break of structure on this leg out here where we broke these swing highs over here. When we did that, then that confirmed to me that this price was trying to start turning up to the upside. Because remember, we were in a little bit of a downtrend for the last few days prior to that. So a short-term downtrend. Remember, we're looking at this thing on a 4-hour time frame. So I have to start seeing on some of these smaller time frames a downtrend. That's just the reality of it, But it's in the context of the higher time frame uptrend. So, yeah, we get that break of structure right here. More specifically, just if I drew a line here, okay, break of that structure, and then now I just need to look for a demand zone on a smaller time frame. Well, it's kind of funny. And I don't always play it like this, but on this particular, when you see that blackened box there in the middle, that's actually a 1 minute demand zone. Okay. Now it's crazy. I don't like to go down there too often, but the reason I have, and the reason I was okay with this is because that 1 minute demand zone is inside of that 4 hour. So I've got the benefit of knowing that I'm bouncing into that higher time frame demand zone, which has way more strength than a 1 minute zone by itself. So I was okay with that. Now, the price retraced and started rejecting, but as you and this is where I initiated the buy. But as you can see, it ended up going down through, and this is actually a beautiful thing to show. Okay, so price broke down below that 1 minute. So was it really that strong? Maybe not. I mean, it did catch just a little bit of a bounce, but nothing to shake a stick at. But, and then of course I had my stop loss, just so you understand, underneath the 4 hour demand zone. Okay. Not below that 1 minute. Okay. I took into account the whole 4 hour zone. So I had my stop loss down here. But yeah, as you can see, this is why I had that stop loss below the 4 hour, because it at the bottom of that demand zone, it finally caught a bid. Okay. Caught a bid and started going up. So let me refresh my screen. Okay. So we were down here, and then we finally caught the bid and started moving up and out. Okay. And we've been going up ever since. Now we are just about to bounce into this 4 hour supply zone. Okay. Let me just, yeah. So this is a potential landmine, a potential stumbling block, if you will. Okay. So what I have already done in my position, which of course my position, by the way, is I use Trade Locker, and this particular position is on my two trade challenge accounts that I have. Trade Locker only allows, and this is Trade Locker here, but this is for my demo account. So I'm not able to switch. Trade Locker, as of now, does not yet have a way to switch between accounts from the platform, which is kind of kind of sucks, because I can't really go to my actual challenge accounts to show you, because I'm logged in already to my demo account here. Okay. Now I've got it on my so I use Google Chrome for all this. Now Firefox is actually where I opened up my 250K account, but I don't have a way to share it, because I have to stick with Google Chrome. It's just the way this crap's set up. And so, yeah, I wished I could actually show you, but let's see here. I guess about the best I could do is just, here, I'll just do this, just so you know that I've actually got a position open. Okay. We'll just copy and paste like this. Okay. So there's my actual position here. I just did a screenshot of it. Okay. So we're just showing that I'm in a position. Now, and again, when I got into this position, okay, I had my stop loss down here where you see the red line. Now, what I've done, since we have broken this structure now, these couple structures, and we've gotten close to the supply zone, I've actually moved my stop loss just below my entry point, because if we're looking right here, there's a little demand zone. So this demand zone right here, okay, could be the saving grace if we happen to get a turnaround. And probably what I'm going to do, yeah, because this is I'll probably what I'm going to do is go ahead and move my stop loss up here. So I'm going to move it in. I was using this while this price action here was occurring. So now that we've broken this structure and we're up here, I'm going to move my stop loss under this candle here. Okay. Lock in a few bucks. So let's go back over here. In fact, I better do that now. while I'm thinking about it. Aussie dollar. And that was on a 1 hour. Okay, perfect. So I'm just going to do that over here off screen real quick. Stop loss below that area there. Perfect. All right. So my 100K account, my zone or my take profit is moved, my stop loss rather. And for my 250K account, it is moved as well. Perfect. All right. So worst case scenario, I've locked in enough money to cover my spreads, or I should say cover my swaps, cover my fees, because the Aussie dollar is a little bit of a negative rate differential. Okay. Let's go take a look at the carry trade scanner. Something I haven't showed you guys yet. Carry trade. Okay. Where's Aussie dollar on here? It's gonna be red. So there you go. What does this mean? Well, this means very simply the Aussie dollar as the base currency gets a 3.6% rate number. Okay. The US dollar 3.75. This is our rates, right? This is our rates, interest rates, bank rates, all that fun stuff. If I'm buying the Aussie dollar and selling the US dollar, I'm actually getting charged 15% fee each day I hold this trade over, right? 15%, I think, of my open position. So it's a negative. Okay. Basically, whatever color these assets shows is the direction you want to go if you're trying to take advantage of the carry trade or the rate differential. So Aussie dollar, if you wanted to do that, you'd be shorting this asset. Now I'm buying the asset. So I'm actually paying this 15% differential at the end of each intraday session for simply holding on in that position overnight, if that makes sense. So that's not that much. That's a very cheap amount. Okay, 15%. So I'm not worried about it. But it is just a tiny bit of a fee each day. And it'll add up. Especially if you're in a trade for weeks and months, guys, this thing can this can really add up, especially if you're doing, something up here like shorting the pound Swiss, right? Shorting the USD CHF, the US dollar Swiss franc, right? Because now you're paying a 3.75% if you're shorting one of these blue assets. Okay. So it's always good, especially when you're, and trust me, position traders, long-term swing traders, they know these numbers very well. Okay. They're not wanting to pay a ridiculous amount of fees unless they know for sure or feel very confident that what they're trading is going to pay off in the long run and more than compensate for all the swaps and carry fees, right? So anyway, I'm paying a slight 0.15% fee, just for holding this asset long. Okay, so not that bad, not too bad. Oh, let me stop. 1 second, guys. 1 second. I was looking for one of my goodies. But anyway, do I have anybody in here? Is anybody in here? Tough crowd. Tough crowd. Guys, my Aussie dollars trade looking pretty darn good. All right, so look at this. We have now entered that 4-hour supply zone. So this is roadblock number 1. I would expect us to get a bounce to the downside from this. Now, what I'm hoping for is, we come in here, we get that bounce. It'll probably go down. But I would only expect this thing, or, I would only expect it or hope, okay, a little bit of hopium there, to reject just a little bit and then turn around and go through. Okay, this is what I am banking my money on for my position that I'm in. Now, I'm doing that because I've got bullish sentiment and fundamentals on my side and an uptrend. Okay. So yes, I do expect a bounce to the downside, but I would expect it to turn around and go back up very shortly thereafter. Okay. Something like that. In the zone, out of the zone, and then continue. And that's why I have drawn up this demand zone down here, this 1 hour demand zone. Because even if we were to come all the way back down here, okay, I would expect a bounce. Now, that was the old one. Now I want to pay attention to this demand zone right here. Okay, let me get my volume back up. Okay, I'd want to pay attention to this demand zone because I've got my stop loss just below it, my trailing stop. Okay, this is the new demand zone of interest if it happens to pull back. Because I've essentially right now got my stop loss under this candle here. Okay. My stop loss is currently under that candle right there. Yeah, let's just do this. Make it solid. So remember, I started with my stop loss below the 4 hour demand zone, which is where I entered the trade. But as we started breaking structures, this is where I started trailing it up. Okay, trailing it up to break even at one point when we were in this let's see. No, I had it down here. So at one point I just dropped it up here under this candle here. No, that's not true either. I did put it under this candle because this is where the volume started. That's right. So the volume really started on this leg out candle at the top, which broke structure, but because it didn't close above this wick here or this candle over here, that's why I left it a little lower. But then whenever we finally broke through and closed, okay, this is where I moved my stop loss, my trailing stop under this point here. So now worst case scenario now I make some money, okay? Worst case scenario, dang, I made money. Now I haven't made anything worth shaking a stick at yet because I need to see price break through the supply zone. Now this is a 4 hour box, but if I draw that white line there, that's the 1 hour supply zone. Okay. That's really my next roadblock, potential roadblock, because I want to see price obviously, go through and close over here. That's the goal. But I have to be realistic and knowing that that's a fairly okay supply zone. It could very well push price down. And that's why I just threw the projection line saying, hey, if we drop to this demand zone down here, which by itself pushed up and broke a structure, okay, then I would expect we get a bounce from that. I do have, and then there's another demand zone even deeper, but this is really the only one I care about right now. I care about this one. I care about this one. Are we going to break through it, or is it going to reject and come down to where I need this demand zone to step in to keep my stop loss from getting hit and see if I can trail upwards after a breakthrough? So that's Aussie dollar. That is my trade. And I think that's really about all I need to say on that. I can't really do anything. I just need to let it do its thing. Step away from the chart and don't get involved. Okay. I've done my job. My job on this trade was taking away my risk, getting rid of risk as soon as possible, right? While still giving us some wiggle room to breathe. So that's what I've done. Job is over. I can't do anything else with this trade until we break this structure or break this supply zone. And at that point, I would probably end up moving my stop loss below this swing low here. Okay. That's it. That's once we close and break and close up here. But as of right now, I can't. So I'm going to leave my stop loss put where it's at. And we'll go on to the next asset. Okay. What's the next asset? Since we're on the topic of Aussie dollar, we might as well look at the New Zealand dollar since it's in the same area, right? So let's take a look at New Zealand dollar because it's giving me a bullish signal as well. Now, I am in a US dollar pair already, so I don't know that I necessarily want to double up my risk. But, you know, if we were to get out of that Aussie dollar trade, then the New Zealand dollar trade would be the next logical one to hop into. Take a look at this. Okay, so we have bounced into a daily demand zone back here. We've touched it again. We've touched it again. And now you can see we've chewed through the rest of it. But now we're getting a new break of structure to the long side on a 4-hour time frame, or we're not. We had a structure point here. We broke that structure. Okay. So because we broke the structure, I want to pay attention to this leg up and see if we can't find a smaller time frame demand zone. So, you know, that's 4-hour time frame. Let's just go down to we'll just start going down through the time frames. As you can see, we've broken through a supply zone on a smaller time frame. Okay, so we come down to a 1 hour, and there's our 1 hour demand zone. Okay, I know it's a demand zone because you had one candle of basing action, and then you had a strong leg out candle, which is an expanded range candle, okay, a strong candle. And then price broke through and closed above this break of structure, this structure point. And furthermore, it broke through this supply zone, which I believe was on a 30-minute time frame. Yeah. So right here, we got a 30-minute supply zone. Okay. That was an indecision candle, was it not? Followed by a expanded range candle to the downside with some volume uptick, some volume spread analysis increases. So that was a fairly decent supply zone back in time, but we've broken through it, showing strength on the underside. Okay. Again, I think that the origin of that strong move up is probably going to be down here because that's really where the volume picked up for a couple candles. A big push up, a little bit of consolidation, and then just a little bit slower of a move up. So I don't know that I want to necessarily use this as a demand zone. This, in fact, let me do this. Let me get the zone out of the way so we can see it a little clearer. Okay. Yeah, I mean, we could potentially even use this as our demand zone candle because we did have an expanded range candle out, but it wasn't as strong as this candle. Anybody can see that from a mile away. All right, that's obviously the strongest point, this candle here. So on the New Zealand dollar, that would be probably my new point of interest. Now you see I've got an alert set underneath. So this is what I went over on my Sunday video last night. We got this decline. And why is is something not right here? Let me look. I'm trying to figure out where my viewers are. I haven't seen any viewers yet. What's going on here? Did I do something wrong? I'm just taking a look at my analytics real quick. Public. Give me 1 second, guys. Okay, so that's good. Well, I mean, everything looks good. I guess everybody's just sleeping in today. Is that what it is? Everybody's sleeping in today. I don't see a single viewer, so I don't know what's going on. Anyway. All right. Well, if there's anybody in there, can you just drop a chat and say hello? Otherwise, I think I'm talking to myself. I see one person in. Who we got in here this morning? Who is this? Is this one of my regulars? I do have a handful of regulars. Okay. A nice, small, humble bunch. So just keep in mind, I'm trying to grow this thing. Okay. I'm a trader first. I'm not really a big tech person, but I'll tell you, I have learned a ton just literally in the last month or so. So I'm just trying to get it applied so I can start growing this channel. Okay. So if you would, just let me know. Hello. Let me know what you're trading if you have any questions on any tickers. And by the way, it could be stock tickers too. I trade stocks. Okay. I keep an eye on stocks. I've got a watch list of stocks I keep an eye on with the stock box. This is from A1 Trading. Really good asset for, I mean, a ton of stocks. I've got like 23 stock tickers over here on my account. Okay, one of my accounts. I think it's like 20, 25, 27, something like that. Apple, Amazon, okay, Cisco. Pretty decent amount. So that was the whole reason I turned around and purchased this stock box from Nick over at A1 Trading, was to start learning how all these technical readings work in the stock world. Now, I learned how to trade stocks, but I never got too deep, never dug too deep into all the financials, okay? The ROEs, the price to sales, all that kind of stuff. Okay, so this is still, full transparency. This is still stuff I'm learning. But the good thing is I have a tool that already pretty much does a lot of the hard work for me. Okay, it's letting me know where the good readings are for the technicals, the sentiment, the fundamentals. Okay, the financials. So just simply take these higher score assets and these lower score assets and try to find a supply demand zone. So anyway, yeah, that's that. And just finishing my thought over here on the New Zealand dollar, the Kiwi dollar. Again, I really like this demand zone that's hiding down here. It's hiding under this swing low and this swing low, which essentially is a double bottom, is it not? Okay. It's pretty much a double bottom. Underneath that double bottom is a demand zone. If I go to a 2-hour time frame, we go back over here, take a look at that green rectangle. And by the way, why is it so dark? Oh, no, that's the right one. Anyway, this is my demand zone of interest. Look at this. Look at the volume that this thing had. The volume spread analysis. Huge expanded range candles in the VSA section at the origin of this strong move up, which, oh, by the way, broke these structures. Okay. This demand zone had the strength to break these structures. I have to keep an eye on this zone. And by the way, the other thing I like about this demand zone is the fact that price came down to it, but just barely missed it. I mean, it missed it by like 0.1, 0.2 pipettes, okay? But it didn't touch it. So it did not touch those unfilled orders. But what happened is whenever the buyers in this area pushed price up, they had to put their stop losses somewhere. So I suspect they probably put them down here inside of that demand zone. So you've got potential unfilled orders from the demand zone itself, plus you have stop losses, okay, liquidity from the buyers in this area. And if they're buying and they're putting their stop losses, that means they're leaving behind sell orders. What do big banks and institutions need to fuel their buy orders? They need their sell orders. Okay, so sell orders down here. They're sell orders. That's their stop losses. Now we go back over to more current times and that same area. Okay, here's that demand zone, that 2-hour demand zone. The same thing's happening here. In this area where you see these wicks, that's buyers. This is buyers pushing price up and breaking structure. Where do you think they're putting their stop losses? Okay, in that area. Their stop losses are sell orders. What do big banks need to fill their buy orders? They need sell orders. So you got a situation where you've got sell orders here, and then unfilled orders from the demand zone itself. Okay, that's a strong combination for a place to buy the market if and when price returns. It's made even more exciting the fact that price pushed away, broke this structure, and now broke that smaller time frame supply zone. Okay, that's showing strength. Now, could the strength be primarily from the demand zone itself, or could it be from this more recent demand zone that was formed on a 1-hour time frame? Okay, this right here could very well be the inducement. This demand zone here. I mean, it looks pretty. It looks pretty nice. Okay, expanded range candle coming out. It did break structure. Okay. but it very easily could be an inducement, meaning, it's just a little bit of a tease. You get price basically come down. This is what we could potentially be looking at. Okay. Buyers step in here, inducement, right? They get a slight bounce only to have the rug pulled out from underneath them. And then the banks target this demand zone to buy instead. Okay. Something like that. That would be a potential. So they're inducing these people to buy. They're rug pulling them. And now we're coming down to collect those unfilled orders and those stop losses to fill their large buy orders. This is the big banks I'm talking about. Okay. So that's what I would be thinking they're doing down here. So the idea is price comes down. Okay. Whenever it hits that zone, we want to see a break of structure on a smaller time frame. So essentially break this structure right here, and then we get a pullback to a brand new demand zone that forms in this area somewhere. So let's draw this light green just for a moment. This is really the play I want to see. Okay, let me do this. Let me reset and then zoom in. Because here's what I suspect on this. Again, this is for the Kiwi dollar. I have to see a break of structure. I have to see this price break this swing low or swing high, this lower high at some point that would form. Okay. We break that high, but this is where breakout traders are buying the market and not getting bad fills. The goal is to see if we get a brand new demand zone form, okay, on this new impulse leg, because that's an impulse leg by definition because we broke a structure. So we get a brand new demand zone form. That's the trigger point to buy this market, okay? We get a retracement back, initiate the buy. Okay, we do that on a smaller time frame, maybe a 5 or a 10 or a 15-minute time frame. Okay, it's not going to always look exactly like this, but that's what I would suspect. If I were a big bank, that's exactly what I would want to do. Hey, I would want to induce I would want to induce buying right here off this demand zone, but tackle the higher concentration of unfilled orders and liquidity underneath. Think like a bank, right? That's how we have to treat this thing. We don't want to think like a retail trader. Retail traders are going to be buying here. Banks, I suspect, are going to induce that and then drop price, pull the rug out, hit those unfilled orders, and then price is going to go in the favor of where these traders thought it was going to go with from the start. They're just going to get shut out before price goes the other way. That's inducement. Okay? That is inducement. It's an ugly world, but hey, that's the only way a bank can get into their full order, because they can't place a full order right there in that top zone. Okay, they're basically just trading. They would have to get in a much smaller position, because if they put their full trade in that top zone, then here's what's going to happen. Price is going to be flying up, and they're going to get a bad fill along the way. Okay. So they have to induce. They have to look for liquidity. Anybody that tells you otherwise doesn't know what the hell they're talking about. And you'd be surprised. There's a lot of people out there that will, I guess you could say, crap on that idea, right? But we got to think like a bank. Okay, that was the Kiwi dollar. Again, I'm not too interested in it at the moment because I'm already in the Aussie dollar. So let's take a look at our top setups again. Euro Swiss, that's the strongest asset. Let's take a look at Euro Swiss. Okay, Euro Swiss dropped into a 15-minute demand zone last night right here. The problem is when I look at that same price point over on my trade locker, okay, for my challenge accounts, the structure doesn't look the same at all. The candles. Okay, here's our Euro Swiss. Here's our 15-minute time frame. Over here, okay. Oh, now it does. See, that didn't look. Hold on a second. Let me reset this. Let me reset this. So you guys see clearly over here, 15-minute demand zone candle, couple expanded range candles coming out. Do we have that same picture over here? We don't. We did have the 15-minute candle, but we had one expanded range candle. So it just didn't look right. You know, at this point right here, we actually dropped below. So if I were to, if this price has not been formed yet, this is kind of the way I would look at this price action. A 15-minute time frame. You guys clearly see this indecision candle right here before that big candle up. So I would essentially wrap a rectangle around that, a green demand zone candle, a demand zone rectangle, and just pull that thing forward. Well, you can see we already peaked out the bottom of it. So that would have negated this demand zone for me. But that's different price. The candles is different. Because see over here, you can see when we got that decline, it dropped into the zone. But over here, it went through it. So something ain't lining up there. That's just unfortunately the thing you have to deal with when you're, looking between, different broker platforms. Okay, the candles aren't always going to look the same. So because we got that looking not so great, I just ignored when price came back to it. So yeah, I guess there's really not a whole lot to add to that. I just decided to ignore all this nonsense. And the only thing I'm really interested in now for Euro Swiss, which is the most bullish asset I have, is really one of two things. Number one, can we get a further decline down to this daily 4-hour demand zone confluence? We have a zone on top of a zone. You guys see those two green zones. Okay, that's two 4-hour demand zones. There's one at the bottom, there's one at the top. So essentially, if we were to get a retracement, let's just look a little deeper into this demand zone area. Okay, there's really a couple options on this thing. Couple options. Okay. Now remember, the yellow is the daily. So I would prefer to have a buy inside of it. But if you look, we have our 4-hour demand because we stepped down. Our 4-hour demand is actually mostly on the above that zone. You got a part of it, the bottom part, that is in the daily. So ideally, I would prefer to wait for price to come down, and rather than buying the proximal line of the 4-hour or the proximal line of the 1 hour, which is that white dash line you see, I would prefer to wait for price to come in to where it actually touches the daily part of the zone, because that's a really good confluence. Okay. And then from there, I would definitely want to see a break a structure to the long side. So smaller time frame, we make sure and get that break a structure that, oh, hold on. Let's redo this. Let's just draw it up. Okay. So we come down. Okay. We get initial reaction, a little deeper retracement here. We get the push out, which breaks this structure. Okay, this turns into an impulse candle. And then we retrace to a newly formed demand zone on a smaller time frame. And this is where the order gets bought up. Okay. So we break this structure here, okay, with this impulse leg. This has to turn into an impulse leg. Now, this is where a lot of people are going to get antsy and start buying the breakouts, right? But that's where people have to develop patience. Because the pullbacks, this leg right here is the important thing. It's always the important thing. Wait for the retracement to the newly formed demand zone on a smaller time frame that forms somewhere in this area. There's your buy. Okay. Now you're buying that in the 4-hour zone, probably closer to the 1 hour and the top of the one day, the daily. That's a really good, strong reversal pattern. Very strong, very strong reversal pattern. I like it. So that's way down here, though. It's probably going to be a minute before it gets down there. How many pips a day does this thing move? Okay, Euro Swiss is a very boring asset. My face is in the way, so let me just do this. Okay. This right here is our ATR for Euro Swiss. So the important thing to note here, anytime you guys are pulling up an average true range indicator, it's going to give you a number like this. All you got to do is drop the last number, which in this case is the 9, or you can just put a period before it and just understand that this is basically saying 30.9 pips. Okay, 30.9 pips. So that is on average how far, or the range, okay, the high point and the low point. That is the average range, the average true range of the Euro Swiss. So in other words, it's a slow mover. It's molasses, okay? It's molasses in a Canadian snowy forest, right? Moves pretty slow, right? That's what the Euro Swiss is. So do I realistically expect price to be coming all the way down here anytime soon? Probably not today, because how many pips away are we? Okay, we're 73 pips away. 3.6. So that's about 2.5 days away. Even if this thing were to just start dropping right now, okay, that's going to be at least a 2-day drop, if not 3, probably longer, because you're going to get some retracements along the way, guys. This asset may not get down there for another week. Okay. 311, 242, yeah, 73 pips. That's a long ways away. It's a long ways away, and also we're not having any major red folder events coming out for the Euro. For the Euro or the Swiss. Okay, so yeah, it's a bullish signal. Okay, but I just don't have any. It's a long ways away from a major demand zone. So another play is, let's see, let's take a look in this area here. Is this an impulse leg? Is this a swing low and this is a swing high? Did it break a structure? Yeah, it broke a structure. Broke a structure right there, didn't it? Well, we already know that this mess here looked ugly on a 15-minute time frame. So yeah, let's take a look down to the left. Got another wick here. Okay. No volume, by the way. No trading activity really occurred in that area. So I'm not excited or interested in that area at all on a 1 hour. Nothing else down here. We have efficient price action, price structure. It's dropped to a 15. Have I got anything? Nope. Doesn't look like I do. Okay, no demand zones. Look at this. This was a beautiful demand zone. Why can't I use this, Tiger? Why the hell can you not use that as a demand zone? Because it's already been touched. It's already been mitigated. Okay. It had a nice gap too. Okay. But the gap got filled and price dropped into the demand zone where the unfilled orders were. This is what banks like to do. They like to close gaps and look for those unfilled orders on the opposite sides. Okay. So that was a beautiful demand zone at one point, but it's already been touched, so I can't reuse it. I don't want to reuse the demand zone. Same thing with the supply zone. So I got to ignore that area. Okay, we're going to delete that. Looking down below, there's really nothing else. I mean, now we're getting down into some small time frames, but at this point, there was nothing. So I think the idea now is perhaps. Okay, we're looking at a 1 hour time frame now. So we've already hit that old zone, which I decided to ignore because the picture didn't look good. But are we creating a new demand zone right here? Well, it depends on how aggressive you want to be on this thing. Because yeah, by definition, this is a demand zone because you had a gap right after, right? Was this not a fair value gap, an acceleration gap, a runaway gap? Okay. It's not a very big gap, but that white box denotes a fair value gap. So basing candle, indecision because you had big wicks above and below, and then you had your leg out candle here, okay, and then your second candle after did not come back and touch the demand zone. So there's still an open gap. Now look at what price is doing as we speak. It's coming down. So do we buy here? Well, I don't do it on a 1 hour because I personally want to see some confluence. So let's see what a 30-minute looks like. Do I have a confluence? Okay, well, there is a 30-minute demand right here, that red candle. Let's delete this line over here to the left. since that's old news. Okay. There's a 30-minute confluence. Now, I don't like to just go straight down one time frame. I like to go down by 4. So we're at an hour. So that would mean I'd want to go down to a 15. But I still want to see what the smaller ones have, just to see where the retail crowd's at, see where their potential liquidity is at. So we have a 1 hour, which is the green box. We got a 30-minute, which is the white box, or the white line rather. Okay. What's the 15 look like? So 15 is pretty much the same area as the 30, as you can see right here. Okay. So far, just to recap, I need to see some confluence. So far, 1 hour, 30-minute. What about 10-minute? Okay. 15 didn't have anything. So here's a 10-minute. Okay. Here's our 10-minute demand zone. It's going to be this green candle followed by the gap out. All right. And since price didn't go that far away, that's why I'm looking at some of these smaller time frames. Because if we look at this thing, start from the 1 hour, ask yourself, how far from price did it go? So if we measure the range of this 1 hour demand zone candle, that's only 6.5 pips. If I take 6 times 3, that's my ideal distance that I need price to go after leaving the demand zone. 6, 12, 18. Okay. We'll call it 20 pips by the time you add in the 0.6. So let's look where 20 pips is. Did we go 20 pips? No, we only went 10, didn't we? We only went 10 pips. So I'm not allowed to look at this as a 1 hour demand zone just yet. The only way I could is if price did this, came up here, and then retraced, because that would give me more profit potential. But it didn't do that. It only went 10 pips out, guys. So I have to step down to a smaller time frame and measure from down here. So we've already measured the 15, well, the 1 hour. I can tell you right now, the 15, even the 30 and the 15 is not going to be much better. Okay, that's about 5 pips, 5 tenths. So we've only went 12 pips now. So that's just barely 2 to 1. Not exciting. Let's drop it. Okay, 10-minute. Remember, here's the 10-minute. Is this going to give me a 3 to 1? Okay. Okay, that would be the 10-minute candle. So that's now you're getting down into small territory. Okay, we're 3 pips, 4 pips. Yeah, you measure that to the long side. Even if it's 4, that's 4, 8, 12. So that's over 3 to 1. But this is where it just gets a little hairy, because now we're only talking, a range on an asset of about 3 to 4 pips. And that's not giving you much wiggle room. But what we could potentially do is just utilize the rest of this, swing low and put a stop loss up underneath it a little further if we were to buy this market. Okay. So we would essentially be buying, and then this would be kind of our line in the sand, if you will, our stop loss. Okay. That could be a potential play, but remember, when you're measuring your profit potential, you have to include the stop loss. So you have to give it a fair stop loss to give it wiggle room. Okay. But you don't want to do it too much to where it takes away your reward risk ratio, your edge. So let's just measure this out, assuming we leave a stop loss of about that much right there. And that's a little too tight because of the spread would probably catch us. So let's just go down just a little bit more. Okay. So now we're measuring from the proximal line of this 10-minute demand to the stop loss. Okay. That's 5 pips. And again, we got to go up and see how far away price ran. 13 pips. So guys, this still didn't make it 3 to 1. It should have went at least 15 pips and it didn't do it. Okay. So do I really want to get involved in price right here? Probably not. Probably not. Yes, it broke the structure, but it would have looked a lot nicer if it would have been able to break something like this supply zone up here and just basically gave it more profit potential, but it didn't do that. Okay, there's a 10-minute supply zone right there. Did we break that? No, we didn't even touch it. So, and you could make the argument that this right here was a 10-minute supply zone. Okay, this green candle, yeah, you had a little bit of an extra wick on top. Looks to me like it's already kind of hit a supply zone. So I can't really even be looking at this area. That's too small of a time frame. The market structure is not looking good. That's a hard pass. Remember, the only reason we were digging into this deep anyway was because it was giving us a very bullish signal, right? So, just best to stick to our rules, and our rules don't give us a good play on this for demand zones. Okay, maybe there's other trading plans, I'm sure there's other trading styles out there. People that like to use moving average crossovers and this and that and the other. There's 1,001 ways to trade, right? I'm sure there's somebody's trade plan. Somebody's trading rules allows them to trade it. My trade plan does not allow me to trade that. Okay? Just doesn't allow it. So we'll just skip that. Let's take a look. All right, let's look at some gold and silver now. Okay. Gold's a 7, silver is an 8. That's a nice bullish score. Gold, okay, here we go. Gold is at all-time highs yet again. Okay, all-time highs. And I believe silver is as well. Yep, silver's at all-time highs. So how do we play gold and silver? We're getting a bullish signal. That means I got to go out and buy it, right? No, not just yet. We got to have a retracement. So where's our retracement? Well, if we're looking at gold, so now I've got a new demand zone on a daily time frame I can be creating, because the prior closest was down here. Okay, daily demand zone gap, but I'll be honest, I wasn't too excited about it though, because it had a lot of candles to the left. But now we get to draw up a new one. Look at this. See this candle here? The next candle legged out, and then we gapped up yesterday, okay, on the market open, the weekly market open. So that means now that this is a daily demand zone. Okay. This is the start of all good things right here. Daily zones. So that's your daily. So I need to find a 4-hour inside of the daily. Do I have one? Yes, I do. Okay. Now I'm going to redraw it, just because when you put whatever color box you drop down at the end kind of overshadows the ones that you had up. So that's why I like to start with my daily supply and demand zones, because they're yellow. And then when I draw in my 4-hour and lower, green or red if it's supply, then it looks a lot clearer. So this is my daily 4-hour confluence. Yeah, I love that's my hotspot right now. A little bit of volume spread, pushing out of that. It did get a little lazy though. I do have to admit that. Okay, before it broke the all-time highs from the 6th. Okay. But nevertheless, daily demand, 4-hour demand. Do I have another 4-hour demand up in this area? Let's take a closer look at this. Excuse me. Well, this was a clear buying signal, but got strongly rejected to the downside. Okay. Then you had this candle that pretty much got engulfed by this previous candle on no volume. Hey, this was Friday. This was Friday after the lunchtime doldrums. This candle here. This is a 4-hour chart. And then you had the gap up, obviously, yesterday. So let's drop to a 1-hour and see what we got. Where does our VSA really start picking up? It looks to me like this candle here, right? So that's the 2nd hour of the intraday session after the new week started. That's where the volume started. That's where the volume kicked in, okay? So I really want to look in this area and try to find a potential hotspot. Okay? You see I got a green box drawn up. Well, let's go down time frame to find out. So 30 minutes. So I've got a 30-minute demand zone drawn up. Okay, I need to pull that forward because I drew it before I went to sleep last night. Okay, this is my 30-minute demand zone. Now, what's this blue dash line above it? Well, that's the former all-time high. Back here, okay. Back here on late December, okay, the 26th, day after Christmas. Okay, that was the most recent all-time high. And now what we've got is a brand new all-time high. What happens oftentimes when you get a breakout from a 52-day high or 52-week high, 52-week low? Okay. You get a lot of buyers looking at that same spot. You got some people buying the breakouts or shorting the breakouts if it's on the downside. But is the safer play not to wait for the retracement? Yeah, of course. This is what I'm trying to do. Okay, a lot of buyers right here, only to know that they're putting their stop losses down here. Okay, somewhere along the way here, and I would suspect that a lot of those stop losses are going in this demand zone, this 30-minute demand. So all I want to see is just a simple retracement back to the demand zone. Couple reasons. Number one, that's where the unfilled orders are. I know that because that's an indecision candle. And you had two expanded range candles leaving the zone with some volume, pickup. That broke a structure. Okay, because again, that zone broke the structure of the previous all-time high. That's strength. That's some pretty good strength. Now, furthermore, you're going to get some traders that whenever price returns, here's what they're going to do. They're going to buy the retest of that former all-time high. They're going to buy that. When they buy, where are they going to put their stop losses? They're going to put it below price. Okay, probably going to put them in this demand zone. Remember, these are unfilled orders just by themselves. But then by the time you start adding liquidity in the form of break of structure, expanded range candles, former all-time high retests, okay, that's going to add more liquidity down here. Now, it very well could, leak and drop down further. It could drop very well to the Friday close, the gap, okay? But for me personally, because I'm seeing the first bit of strength come from this area here, that's where I'm looking to potentially buy. So I want to go into here. Okay. Now on the surface, that looks just like most any breakout trade, but I have a reason because I'm tackling the potential unfilled orders and the stop loss orders that are probably accumulated right under here, especially from all these people that bought in this area. They got to put their stop losses somewhere. So yeah, there could definitely be a lot of sell orders there. Okay. Sell orders from the stop losses from these buyers. Opposite of a buy order is a sell order. Liquidity, unfilled orders, retracement, potential buy. That's going to be my gold play right there. So I've got my alert set and we are all good to go on gold. Silver, let's take a quick look at it. Guys, it's about time for me to get out of here. I do have an alert set down here. Let's drop down here to see. Yeah, so we broke through this swing high, so I can delete that now. Yeah, I mean, it's a little deeper of an interest point for me on silver versus gold. It's at all-time highs as well. So we broke the structure over here on that point. We also had a little bit of a structure here, which we broke. So this is our impulse leg. Our impulse leg also already hit this daily demand back in time. So I've got the knowledge of knowing that. So I feel pretty good about this up leg, just like the gold leg. But at the moment, it looks like the best. Oops, I didn't mean to do that. The best demand zone I see is down here. But anyway, we'll go down to a 1 hour real quick. And yeah, you guys see I've got a couple white lines there. So you go to some 30-minute and 15-minute time frames, and that's where these white lines. So I've got my alert set here. I'm going to keep it here because I'm more interested in buying in this area down here. You see the volume started picking up. Obviously, on the smaller time frame, those zones will stick out. You'll understand them. Up here, hey, on the Sunday open, this was the Friday close, by the way. But on the Sunday open, we had a gap up, so this could potentially become an area of interest as well. but I don't think I really like the volume as much. So you know what? We'll do this, and then I'll get out of here for the day. We'll keep an eye on this area up here. Yeah, I mean, this by definition is a demand zone. It's just a little further up this impulse move. Okay, there's a gap underneath it. This is why I was watching this zone, because that's where your fair value gap is. So gap, demand zone for potential unfilled orders. But I also have to acknowledge this was the opening gap, runaway gap. This is the definition of a runaway gap. Okay, price closed here Friday, but on Sunday it gapped up, kept going. Okay, so that's why I'm gonna keep an eye on it. But I got to be honest, I like this zone a little better. So we'll see. We'll see what happens. That's pretty much it, I think, guys. Unfortunately didn't have anybody pop on today. It doesn't look like so. Look, I'll be back tomorrow, regardless. Okay, if you build it, they will come. If you build it, they will come. So I'm going to have to get creative and try to figure out some ways to get some more people. But with that, I do appreciate you guys. I'm going to watch my Aussie dollar long just to see, see what kind of an outcome we get out of it. And I'll be back tomorrow, same time, 6:30. Tomorrow is also my appearance with Trader Nick. You guys have a wonderful Monday. We'll talk to you soon.